Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com and on Twitter using the handle thekouk, TheKouk, the Kouk. Stephen, good morning.
Good morning, Sean.
A bit going on this week, but what a week last week was. What do you reckon of those inflation figures and what's it mean for rates?
Well, the inflation numbers, in a funny way, if you take a step back, they were only a smidge, 1 or 2 tenths above expectations, but they created, a firestorm in financial markets that sort of had everybody rushing to sort of put in a call for a hike from the RBA when they meet on Melbourne Cup Day. And we had Michelle Bullock, the RBA governor, giving a couple of interactions, a couple of chats, including to the Senate, where she said, look, we haven't really updated our forecasts yet. They're sort of broadly in line with what we were thinking. The Treasurer, he butted into, so Jim Chalmers sort of came out talking about cost of living pressures and said, yeah, they're broadly consistent with the Treasury forecast. So we had this almighty kerfuffle over a relatively small forecast miss on the inflation rate. And look, wow, I think it'll be the data that's released this week, which will determine whether or not we get that rate hike or not on Melbourne Cup Day.
Okay, so what data do we have coming out this week that we should be keeping a very close eye on, given what you just said? Retail trade, let's start there.
The retail trade is the biggie. That's the one that's really important. It makes up a pretty significant part of the overall GDP profile that, what we consumers, you and me and all the listeners spend in the shops, at grocery stores and in cafes, restaurants, these sorts of things. That's what retail sales are basically. And they're a big part of the economy, as I mentioned. And they've been weak for the last 10 or 11 months since the end of 2022, that as the rate hikes from the middle of last year started to bite, we consumers were hunkering down on the back of those rate hikes. We've had inflation rising by more than wages. Indeed, and that was confirmed last week too, just by the way, with those inflation numbers. And we consumers have been responding to that by trimming back our expenditure. So the lead into the number that we get out later this week is going to be absolutely fascinating. If we do get an okay figure, and by okay I mean probably growth of only 0.2 or 0.3% month on month, so not strong, it might just tilt the RBA to say, hey, maybe consumer spending's weak but not catastrophic. Inflation's a little bit higher than we would like. It's still coming down, but not as quickly as we would like. And that would feed into the narrative of the rate hike next week. But if we do get another shocker, another bad result, we've had a whole lot of the retail companies coming out this last little while sort of confirming that sales are down and margins are down. So if that shows up in these retail sales numbers, then you might think, well, we've done enough. Yes, that inflation rate's a little bit uncomfortable, but we can sort of tolerate that as the economy slows down. So retail sales are the biggie for this week.
It really highlights just how close the call is about a rate lift next week.
And it genuinely is. Looking at the futures market and, dare I say it, even the betting markets, it is literally an even money each of two sort of proposition right now. And, unless there's a well-placed journalist out there who writes something about what the RBA is thinking, or we get, a run of shock numbers, not just domestically, but also internationally, what's happening in geopolitics and things can have an influence. And I know we're only a week and a bit away from the next board meeting, but, if there were to be a couple of shock indicators coming out of the US or China, out of the Eurozone, or, as I said, a geopolitical disaster emerging, then that might influence the RBA. But for the here and now, it's a genuinely close call. I'll use the Melbourne Cup metaphor, it's a photo finish.
Indeed. Look, a couple of other data out this week. Building approvals.
Yeah, building approvals, not unimportant, but one of the things that we do know, desperately know, is that we need in Australia to build a lot more houses to accommodate the strong demographic changes, the population growth through immigration and foreign students coming to Australia to study, all those good things about the economy, but we just don't have enough houses. So building approvals have been lagging for the last 12 months. It'd be nice to see a small increase, a 3 or 4% month-on-month increase to sort of signal a turning point in construction activity. But I fear we might not get anything that good because we still keep hearing stories of building companies going under or confronting, genuine and severe cost pressures. And look, I think the building and construction sector's got a couple of more months of weakness before we hopefully get a turning point next year.
And it's the end of the month, so we'll get house price data as well. Those people who forecast 20% drops in house prices, well, I hope they're all listening to you right now, Steve.
Well, I hope they are too. And, you've got to take your wins when you get them. But look, we do know from the high-frequency CoreLogic data, the ones that they put out daily for the 5 cities, that we're probably going to get another month-on-month increase of about 1% Australia-wide. Sydney, Perth, Brisbane doing very, very well. Adelaide's still doing very strongly. Melbourne, the laggard, but still going up. It's still increasing. And the rest of the country sort of just registering small increases. But again, I love Economics 101, Sean, when you get strong demand, population growth, weak supply, low levels of construction. What happens to price? It goes up. And that's exactly what we're seeing on housing right now, even with these interest rate hikes that have already been delivered.
Stephen, enjoy your week.
Will do, Sean. Thank you.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.